Good morning. It's the 14th of March, 2024. I got some big numbers out this morning. We have core retail sales at the bottom of the hour here, initial jobless claims and PPI and retail control, and should be quite interesting. That's all coming up here in another 10 minutes. So I thought I'd turn on the stream ahead of that. I very rarely trade a number. Just don't see how to manage risk there. And so, but it's very definitely something to watch, and certainly affects the market. We're looking to open higher out of range if we stay up in these areas. This is overnight trade. This is yesterday's trade. Big spank job over here for some longs, and then we traded up all night. Now, who knows where we're going to open? I haven't changed anything on Bookmap yet. This is the micro composite. This was yesterday's trade here. These green lines are the high volume nodes of the micro composite, obviously. This is NQ, and this is the day session market profile. So that's that. Now, normally I would change this stuff and start adding the values in here for the statistics, depending on the opening type, but I'm not going to do that until I know what opening type we have. At the moment, yesterday was higher out in range. Today we're higher out of range, as I said, obvious because here's yesterday's close, a regular trading session close. And but with this big report, who knows where we could go depending on which way it comes. It could break either way substantially. Just quickly about the Bookmap here. This is there's no indicators here. This is a POC. This is now the full session POC, which is this market profile or market volume profile right here. Started at 1700 last night, and here we are. Not a lot of room, as much as it looks on the Renko chart. Here's the ETH low, and here's our ETH high. So, what do we got there? 53 to 24, so 20 points. Total range. Then there's the VWAP and the mid. Now I keep VWAP and mid set to the full session or full RTH session, not full session, but the RTH session, which is this volume profile here. And at 8:30 this morning, this will reset to 0. These will all set. So that way I never have to change my start times or monkey with this, any of the settings on Bookmap at all. It's just everything's where I expect it to be when it's time to happen. This light blue line that you see is a correlated market. That's the NQ. Relative price movement. Obviously, it's not the price. The NQ is trading at 18,400 and something. So price isn't it, but it's relative movement. This is the high volume, high time frame numbers. This is the all-time high adjusted data, and that's from these numbers I manually enter. They come from over here. Here's the all-time high and adjusted data, for example, that I was just pointing out. These are the price levels pushed from Bookmap. This is the overnight POC, the Globex high, the previous Globex high, previous RTH high, overnight mid. And at some point, I'll enter the statistics of which or the probability that these different levels will be touched by price in the regular trading session. But that's based on the opening type. So we'll see what happens there. All right, that's about all I can say here in the morning as I'm getting going. All times and everything on my computer and everything that I post or speak of are in Central Standard Time, which is this. That's the time of the futures market. It's CME and CBOE is in Chicago, so that's Central Standard Time. I happen to be in Central Standard Time also, but now. But for many, many years, over 11 years, we were in Kuala Lumpur, Malaysia, so it was, the market would open at 2100 over there. All right, get watered up here, and we got 5 minutes. Two minutes here. I forgot to activate the multi-brackets. This sets up the 2-lot package for the multi-brackets for trading. Activate the trade platform or trade function. Make sure it's set for 2 as the multi-brackets and the brackets are off. Now did I set it for both? Yes, both. That way I can initiate with the keyboard and change the stops and stuff with the targets with the mouse. There we go. Now let's see what the hell happens now. Be sure and watch the sure and watch the shut off the back music there. That's what happens. The price here on the number. You can see where we traded up all night. The overnight POC came up, and here we go. And there we. Now, there's no way you manage that risk unless you were just, planning ahead through a stop in and through a short in, just betting on the come. And there are people that do that, I suppose, but that it's just gambling, That's like go to Vegas, have some chick with big boobs bring you drinks for free, you know what I mean? It's like go to the buffet, whatever. Why sit in a dark room by yourself and a bunch of monitors and call that gambling? I don't gamble. I approach trading as a business of probabilities or statistics. And now we're back in range. So you see, now we're higher in range at the moment as if we opened here. Retail sales are off and core PPI is up. So there you go. I guess I could add that. Yeah, we're going to get a big sell-off here now as they digest the number. There's 10 points on the number. Notice how the book disappeared. Going to be kind of a goofy day here. I don't know how long I'll stream. We've got people coming over to tear up the kitchen floor and put down new tile. So well, not much of an indication that they want to bring it back to the scene of the crime there with any kind of a bounce. So that's kind of interesting. Core PPI numbers were good, or were green anyway. Expected 5% increase, and they got 3. Jobless claims, they expected 210, they got 209. Core retail sales, they expected 0.8, and they got 0.3. Minus 0.8, they got minus 0.3. So retail sales didn't slow quite as much as they thought, I guess you could say. Now they're going to try to take it up here to the scene of the crime as they digest the numbers. I got no idea. But it's interesting to watch. Yesterday, there was a couple biggies. The 30-year bond auction was big hit at noon yesterday. It's real important. Some people don't, they put on their macho crap, but they don't watch numbers. They don't do this. They don't do that. Well, that's just stupid. As far as I'm concerned, this is a perfect example. of how they can impact the market. So if you don't want to trade them, and I don't, as I said, usually, because I don't really have a plan for it, and I haven't been able to figure out how to get a statistic or an edge figured out around numbers because they're so random. So at least be out of the market. Your primary goal as a trader is to preserve your capital and be able to trade tomorrow. I mean, what the hell? Come on. How basic is that, right? Yeah. So that's why I always err on the side of caution. And maybe too much so. I trade very little, actually, because I don't, I have certain rules around my risk neutral setup. For example, I have to have the first scale is at 3 points positive, right? That scales off and sets up the risk neutral position. So if and one of the rules I have is there must be 3 points to that first scale before any obstacle. In other words, I couldn't take a trade here at 43 because the first obstacle of liquidity is up here around 45. That's only 2 points. So that's something that I've been kind of dealing with this rollover when the algos have been bracketing so closely. I've got to try to figure out a way to make sure I have that I am actually identifying the obstacle rather than just seeing something in the heat map, and which I used to rely on, that maybe isn't exactly an obstacle. But anyway, so I don't take a trade. And there are many days I've taken one trade this week. Today's Thursday. Worked out as planned. Scale and target and P2. But, that doesn't, how am I ever going to buy that Ferrari? But, wrap my garage or whatever those idiots doing on the internet. Truly amazing to me how some people that I hear speak on YouTube or whatever. I try to listen to some YouTube just to put myself to sleep at night. Some random crap. And it's amazing to me how many followers some of these people get that have that. And when I hear them speak, I think, who is this Looney Tunes? Where'd they let him from, loose out of? It's just crazy. And 1 million followers somewhere or something. It's crazy. I'm not saying bad for them or anything. I'm just what strikes me is how obvious it is to me that they're just bullshit and bus tickets, just saying this random crazy crap. One guy I heard say, yeah, he knew about this algorithm and exactly how to trade this because Jesus Christ told him so and gave him the algorithm. It's like, that's pretty random in my opinion. And what I don't understand is how millions of people follow them. I assume they must have positive results. Maybe they just talk crap, but they actually know what they're doing. I don't know. But I don't want to bother with it, to be honest about it. I don't know. Anyway, kind of a random rant there this morning. The coffee hasn't kicked in yet, but it does astound me. One of the most amazing guys that I've bumped into that falls into that category is this inner circle trader guy, Michael something or another. He's got over 1 million followers between YouTube and I think it's one of the, I don't know, Twitter or one of those kind of deals, social platforms. And there's countless streams online of people. Another one that I find funny is like he's got a bunch of content, and I mean a bunch of content on YouTube and places. And then there's a whole subset of people that have a bunch of content and a lot of followers interpreting or explaining what he said. It's like the Bible, supposedly Jesus said something, and then every second person that could write comes up with their interpretation of it. Same idea, kind of. And they all have followers. And he says some really random crap. He's the one that said something about, he believes that there's no such thing as a auction market theory, that it's all controlled by an algorithm, pricing algorithm, and that he knows what that algorithm is because Jesus Christ gave it to him. I actually heard him say that in a live interview because I didn't know who he was. And I thought maybe he had something interesting to say. It was interesting, all right, but I don't know. I certainly wouldn't follow what he says to do, but millions of people do. So it's real strange. It's a strange dynamic to me. Makes me wonder about me. Am I the one that's out? It's the old story, everybody in the band's out of step but me. Maybe that's the case because I think, Jesus, who in the Christ's right mind would listen to some of these people? But millions of people do. So maybe it's me. Well, we're almost back to the scene of the crime, which would have been a mean reversion from the lows down here. Would have been a pretty nice trade of about 8 or 9 points. Still isn't over yet. Like I said, I just don't trade the numbers. This has been quite a methodical sort of a deal. I mean, there was a little bit of a jump here at the beginning, but it traded down, tested here. This would have been a good mean reversion back to the mean, and that's exactly what it's done. Fairly orderly auction, assuming that you believe that there is an auction. I believe that price auctions, but the part that I sort of separate from is that they're looking for fair value. I don't believe anybody or very few people trading in the daytime intraday auction give a shit what the price is. I don't think anybody cares what the price of the ES is. I think what they care about is that can I buy it down here at 40 and can I get rid of it at 47? Speculating. I don't think anybody cares. There's high time frame people and people who are the whole purpose of futures, as I understand it, was that they were set in, basically developed as a hedge for options and positions in the market. Now, typically like grain farmers that they would they could hedge their grain crop by buying futures or selling futures because they would have a price locked in. That's how futures got started, as I understand it. So, those guys have a reason for being in the market. But I don't think the majority, especially the retail crowd, which I fall into, that subset, I guess now. So that was a beautiful mean reversion trade, which I didn't participate in, but certainly was one to do. Yeah. Oh, there we go. Now I got these people are supposed to be coming over here at the top of the hour, so I'm going to put on the Be Right Back and Now, something that's pretty important to remember is we've got the MC, which is at this point the all-time high of the ES on this adjusted data, just above here at 57, overnight high. So now we're looking like we're going to be opening out of range. I'll wait to do the statistics because I'm sort of tired of. I can change this. It's obviously really simple to do, but I'm tired of typing in all the statistics here and then, 15 minutes before the open, they pull it back down under. So we'll see what happens. Right now we're at previous RTH high. So right now we're in range or, bouncing on it. And I'll be right back. Yeah, and so here we go, eh? We're never got up to the, just touched the overnight VPOC or the full session VPOC, which is this more muted yellow. That's for this profile here. Yeah. This brighter yellow is the full RTH session VPOC, which is right here. And that will, this column will set down here back to 0 at the open of 8:30. That's it for lines on the chart and for where we are. I'm going to get ready to post my T-Lab snap at 8:20. And then we will just kind of watch and see between workers showing up and whatever else. I don't have no idea if I'll trade or not, but I'm set up to do it and the stream's on. So there we go. Where the hell are we actually? We're below. Okay, so we're now opening higher in range. Pretty soon we're going to be lower in range because the higher or lower bit is regulated, as I understand it, is regulated by the previous day's close, which is right here. So when we get below here, we will be lower in range, not higher out of range or higher in range. And I would say that's probably where we're going to open. I don't guess we're going to go ripping up through there anymore. I'm going to leave it at higher in range for now until I see what the hell they're going to do. They're going to keep messing around with this crap and get down here to where it's lower out of range or lower in range, which, just a joke. Obviously, I don't care. It is, I am not going to set the levels. And if you're not, I guess I can go over that. The statistics are from an IRT study, which determines the probability of, let's take this one here, which is always the highest probability, the overnight volume point of control. So depending on where we open, higher out of range, gap up, higher in range, as we are now, lower in range below this previous close, or lower out of range would be a gap down. It says what percentage of the time we opened in those conditions did we touch the EVPOC. That's all. I take those statistics based on the open and manually put them over here alongside the price level that they pertain to. And the way that works is this. Here is the study. Okay, here's higher out of range, in range, lower in range, lower out of range. Right now, we're looking at higher in range. So it says that out of 1,025 days, 925 days, 1,925 days, the overnight point of control, volume point of control, which is the EVPOC over there, was touched 82. My eyes are so bad I can barely see it. 82.8% of 9% of the time. And out of the 1,925 days, that constituted 459 days. So that's all there is to it. 82.9% of the time. And I do that for every one of these levels that I find interesting, and it's usually the overnight mid and the overnight high and the overnight low, etc. Previous high, previous low, close. So let's do that. 82, where did I go again? 82.9%. If we come over here to the overnight mid, the overnight volume point of control, 82.9%. Who cares about the percent? I know what it is. There you are. So I put those flags in manually. And then, because my business is probabilities, I have specific setups upon which I capture the data and determine, with all things being equal, context, open type, scale, targets, etc., with all the parameters being equal, what percentage of an edge is or is not around that setup. So let's pretend that there's a setup that says, I don't know, let's pick one, VPOC migration, where the VPOC migrates up. Okay, that has a percentage edge. So you take all instances of that and let the law of large numbers manifest profit to your account. What happens with these levels is it gives me suggested target ideas. Because it's a business of probabilities, I'm expecting the setup that's going to happen. It's not a big mystery, drops out of the sky. It's not gambling. It's not, gunslinging, none of that stuff. I anticipate where a setup is going to present itself by the way the market is moving. And when so doing, I also have these statistics as potential targets. For example, if there was a VPOC migration up after the open, in other words, it looked like we're trading up, one of the first statistics I would target would be the overnight VPOC because it's the highest probability. In other words, 82.9% of the time in an open configuration, this was taken out or was touched by price. So if you open down here someplace, there's an 82% chance you're going to get up here. That's that coupled with the risk neutral setup, which is real simple. Again, it is 12 tick stops. In this case, because of this setup, you can't set both stops equally. but you can change them the minute the trade is on. So one's 12, one's 13 ticks. The first scale is at 12 ticks. The minute that scale is hit, the trade is risk neutral. The second lot, the worst that can happen on the second lot is a scratch. And that's a huge psychological benefit, at least for me, and I think for most traders. Obviously, you can trade as many of these 2-lot packages as you want to, but for the purposes here of explanation, we'll go with one 2-lot package. Both stops are at 12 ticks. First scale is at 12 ticks. Therefore, the second runner is risk-free, risk neutral. You cannot do worse than a scratch unless you're a complete moron and you move the stop out, which is, if you do that, you deserve to go out of business and just consider yourself a retail trader. To hell with it. But that's how that goes. So there we are at 20. Got to do my little T-Lab post here. These guys. And I do a post for this Traders Lab every morning at 8:20. I do one when I around 6 for the market numbers of what reports are coming out, and then I do one at 8:20 every morning with these general numbers that you see here. This post that's just try to help the folks who don't have IRT and some of the other bells and whistles or to be able to see all the numbers to try to contribute a little bit best I can. Not that I need to necessarily. And here we are now trading lower under the close. So there for a second we were lower, lower in range. Yeah, it's stupid. I mean, it's gonna just leave it alone. Now the differences are. You see that the overnight point of control at higher in range is 82.9% of the time. Higher out of range is 79.1%. Lower in range is 84.9. So it goes from 82.9 to 84.9. Not a hell of a difference when you're in range, right? Lower outer range is 83.6. So that's got a really high probability. This overnight volume point of control has a very high probability in all open circumstances or conditions. So that's pretty important to note. I don't know what I'll do here today. It looks to me like they want to open lower in range, which is okay. It's 84.9. That's kind of weird. Yeah. Oops, can't be right. There we go. We'll call it lower in range. And we'll set this one for lower in range. There we go. And it'll probably turn around just before the open and jump up. Who the hell knows? Because we're so close. Well, we're right on the VWAP now, and then we got the mid. And pretty quick, we're going to have this will migrate immediately to wherever we open, and then it'll start moving from there. Overnight mid's another good one. That's 82.7%. Which is buried under something. Right here under VWAP. No, that's not the overnight mid. That's the previous current session mid. I'm sorry. I have to look at my RT over here. 44. It's about 44. Yeah. Oh, it's right under here, I guess. Oop. What did I say it was? 82.7. That's one disadvantage to not having the mid and VWAP would reset. You've always got VWAP here, but I don't reset these because I got tired of monkeying around with the start times, and then what would happen with me is I'd forget the damn thing, and then I'd be all wondering what was going on. This is the naked volume point of control from yesterday. This is the previous RTH VPOC, as you can see here. So there we go. And we're still just, squeaking under the radar for a lower open, lower in range. Previous high is 81.0. There we go. What else we got living around over here? Previous close is 72.1. Well, that's pretty likely, isn't it? Something to note about these statistics in this study, it doesn't pay any attention to anything else. News reports, world ended yesterday, nothing. It's just simply the calculation or the percentage of the number of times on the historical data set that each one of these levels was touched with the corresponding opening type. That's all. Doesn't think about context. It doesn't think about how many days in a row the market's been trading up, nothing. And that's the way statistics need to be calculated. That's, I think, where a lot of people fall apart is they put a lot of ifs and thens and whats in there, which can't be, because that's not a statistically significant data set anymore. If you have a bunch of variables, then those trades are not equal. So you can't say that I have a specific edge on this setup with this criteria because the criteria changed. That's pretty important to realize. Value area high. Previous value area high is 57%. Well, you see how it doesn't mean some of this gets a little crazy? And okay. On the open, I will change my IRT charts from the full session to the this is the Bookmap, the T-Lab. This is the study. This is the T-Lab thing I post every day, but my trading stuff is here. And so at the open, I'll change these from the overnight session or the full session to the RTH session. And then these levels will be accurate. And this keeps track of previous and whatnot. So that's how that works. Overnight low, that's always a biggie. Didn't look at that one. I'm on overnight low, baby. How low can you go? 68%. Okay, so we'll go over here to 68%. Oops. Yeah, so of course on immediately at 8:30 the fella showed up for the tile. Let's see now. Okay, we've got a couple of VPOC migrations here. I track these like this. Obviously, this yellow line continues to move. This brighter yellow line is the current session of RTH. This more muted yellow is the full session. But it continues to track, but I flag them over here so that I can see where it was once these yellow lines scroll off to the left. IRT has that easy to spot continuously, but, try to make everything as easy on myself and whoever as I can. What's going on here? There we go. Okay. So I've got IRT set up here now. It's only full set or RTH session. And there we are opening right smack dab and a little bit right on the previous volume area high or value area high, looks like. So, yeah. Now there's no more news today, this morning. There's a Fed balance sheet at 15:30. There's retail inventory auto, X auto, and business inventories at 9 o'clock. So top of this next hour here, another 15 minutes. And then that's it for the numbers till after, 3:30 or 15:30. Yeah. Depending on you. And again, all the times I talk about are in Central Standard Time, which is the market time. Time of the market. So, what did we do here? We didn't take out this, awful close to this naked volume point of control right there. There's the overnight volume point of control, and here was the overnight mid. See that changed a little bit right there at the open. Previous RTH high. I thought I had a stat on that. And the overnight mid. So let's see what the hell I'm up to here. Too much crap going on. I need to just be rich instead of so damn good looking. Okay, what did we ended up doing? Lower in range, right? Mm-hmm. And the previous high. Previous low. Where the hell did the previous high go? 27.9%. Wow. That's pretty crazy. That kind of shows you. Yeah, right? Yeah, and it sure as hell is. That shows you how different these statistics are in relationship to the real deal. Here's the overnight point of control, and here's the high of the previous. And now we're going to sell off here in fine fashion. Yeah, we're just gone breezing through the overnight low and the previous settlement, and yeah, it would have been a nice short. However, okay, I don't take trades from the middle out, and in all, to most TLAB people and a lot of traders, this VPOC migration up was an indication of higher, and you see where that got everybody. And there's nothing down here now. We're the previous. We've gone through the previous IB low, which isn't on here. This is the current IB low. IB low and high are the high and low of the first hour. Nothing magical about that. I don't know what this is, but previous RTH low. Look at that down there. Wow, 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 wow. I'm hesitant. I'm kind of tempted to put a short on here, even though that's just basically a FOMO breakout. So I'm not going to do it. But wow, sure wish I would have. And that target would be the previous RTH low. The statistics for that are probably pretty slim. Let's check. Previous low, baby. %50.2% of the time. So better hurry before it gets there, huh? Yeah, that would have been a really lovely short. And they're just going straight after it. Wow. Lovely. And I didn't get any of it. Yes, sir, Bobby. Yes, sir, Bobby. I don't know what to say here. We're into the market 20 minutes and the thing's falling out of bed. If you take a peek over here at the micro composite, you'll see where we are. We did basically opened on the wick test and down we go. By doing that, I've included today's action in the micro composite, which means these high volume nodes will be drawn. This is the micro composite VPOZ for whatever that's worth. Wow. And the minute I short this and out of FOMO, this thing will take off to the top. You watch and see. All I had to do was say that, and it took off. between the guy tearing up the kitchen floor and the cat's freaking out. And, yeah. I'm out of the game here. Wow. That's just in short is my trade too. So that's just really freaking irritating. We're just approaching the MCVPOC, MC volume area high, whatever. I don't even know if that's a thing, to be honest with you. I mean, wow, look at that damn thing go. Now they got a whole lot of people short. What are they going to do? They've washed out all the longs from the overnight. Well, that's goddamn irritating. Excuse my French, but I sure would have liked to have taken this little pullback short for about 10 points. Damn, that's just, see, that's the secret. I mean, that's why it's so important to stay in the market and focused in the market. I don't know what to do here now, except so I will do nothing. But, I'm standing here talking about how it's going to pull back and reshort up here, right here. And it did exactly that for 10 more points. You've got to be able to react and react quickly because you're focused and in tune with it in order to make some money. There's 20 points here, a couple $1,000s on a one lot. I mean, Jesus. Yeah. Okay. So what do we got here now? Besides a lot of bummed out people that were long overnight. It takes me a while to get back in the swing. And if they put a squeeze on all these shorts, then it's going to go flying up to the VPOC and mid and VWAP and all that stuff, which are, living way up here. There's the mid, there's the VWAP, there's the VPOC, and it is aligned with the full session. So, Merry Christmas. There you go. There you are. I don't know what to think about this at all. These guys on T-Lab are talking about crap. I have no idea what they're even saying. 50, 08, 50, 08 quarter, I guess. Oh, 0775, I guess is it. Where'd you go? There you go. Pretty much basing out here at 10, it looks like to me. I'm going to step away and see how the towel guy's doing. Yeah, I don't know exactly what's going on here, but it doesn't look like a lot of fun. Just now at 9 o'clock, so the IB30, whatever the hell, kind of insignificant at this point, would be on the table. I don't know what to think about this here now. Well, nothing to think. I didn't get in the short on the early part of the day, and I got stuff going on. And I've learned long ago that when you have other things distracting you, that's not the time to trade. It's not gambling or a video game that you do in your spare time sitting on the bus or whatever else. We're developing a pretty toothy profile down. Now they're going to squeeze them up a little bit, I guess. Got a pretty toothy profile going on here on the way down. 1, 2, 3 major distributions, and pretty much nothing through that void. Well, developing value area high, that's pretty meaningless at this point. When there's a a trend move, like this is, it's price discovery. There's no real value area. They're trying to figure out where the hell that is. The value areas that are drawn that represent this, that are represented by this flag or are drawn in the volume profiles, just means that's where 70% of the value traded, of the volume traded. It doesn't mean anything more than that. It's just a mathematical calculation. And here we have a big, big VPOC migration lower, finally. Gambling. Okay, so to illustrate that better, here is the day. Here is the first VPOC migration lower. So they have perhaps traded down and think that this is going to be a value area, or they feel this is a more fair price. Ooh, what's that all about? Here we have the micro composite, which gives you a little bit better idea of what's going on. Market goes up to go down, goes down to go up, and here's today's trade. So maybe the MCVPOC or value area does mean something. I don't know. Anyway, I'm worried about the situation at hand here. Good luck. Maybe. Oops, forgot I had my headset off. So, yeah. Okay. I don't know whether they're going to trade back down through here or not. They're all over the board. There was a bit of a squeeze on right here up to the mid and VWAP. They're likely to mean revert back to VPOC. And so much for that mean reversion to to VPOC. Let's see, we jiggy-joggied up a little bit here. Better make sure you get that caught. Make sure you shut that door. There we go. I don't have any idea what's doing all of this. If you see over here, we're putting in a zipper, right? Which is what these are called. It looks just like a zipper on your Levi's or wherever. I use buttons myself, but anyway, which is just a consolidation. Yeah, well, there. It's just too random here for me. I'm not going to have a bunch of things going on. One thing that I have definitely learned is really important is to be focused on the market and not, maybe it's just me not multitasking properly. I've got a guy tearing up the kitchen and dining room floors. He's asking me questions every couple of minutes. I'm in and out watching the tile that I'm just speaking of this morning. So I'm not going to be trading this. I will be narrating it and watching, and hopefully things will quiet down here and I can pay some attention to what's going on and perhaps get a trade out. That would be great. But until then, I'm not going to put capital at risk because I'm a gambler. I'd rather go to a casino town and, get tickets to the buffet and free cocktails and, decide I'm going to gamble $100 and win it or lose it and then walk away rather than throwing money at this. And I'm tired of some people that are always talking about taking this vetted trade and that vetted trade. And I know damn well as I'm standing here, they have not even remotely vetted or determined that they have an edge on any of those setups. Because in order to do that, for a sample set of data to be statistically significant, there's got to be at least 50 examples. generally considered, by most people in statistics of the data set, and depending on the size of the data set, of course, and also they have to have identical parameters. And there's no damn way that any of these jokers on some of these sites have done that. So I have to keep my mouth shut and just do my own thing. Now, this trade of a vetted trade is a vetted trade, mid VWAP, VPOC. That has some statistics. I have not personally captured 50 instances of that. And my question always comes in my mind, okay, how far do you take that? I need to learn more about it, I guess. Statistics, from basic statistics. In other words, today was a report day with significant numbers. Okay, that's not just a day that opened up with consolidation or whatever else. I need to think about how far I go with limiting the parameters. If I wanted to say that I only took trades, that I only captured data on a VWAP to POC when we opened lower in range, context was down and was based on a big report. I don't, how many goddamn years would it take to get 50 instances of that? So, yeah, I don't know. Now, if you're going to pull statistics and not have them be your specific trades and setups, then if you have a software facility or IRT can do it. If you're good at RTL, which seems to become real complicated for me lately. I used to be able to do it, I thought, but anyway, you can code in all of the parameters as I just mentioned, and then have it run over the data set, which would be, 2,000 days or whatever, and see how many instances that panned out. How many times you got to scale, how many times you got to T2, but you have to have those parameters constant. You have to have the stop exactly this, you have to code in the stop at 3 points, the first scale at 3 points positive, and the second target at pick one. In my case, it's 24 ticks, 6 points, double, in other words, so it's 2 to 1. You could code all that in and then run that statistic and know if you had a vetted edge for that or not. And perhaps that's what I need to do, because capturing the data live is proving to be, especially with the infrequency of my trading because of the plan and the 3 point, clear the first scale within 3 points, of 3 points is within the first obstacle. And coding all that stuff in is something I haven't been able to figure out. I got quite a bit of it started here not long ago when I started thinking about this. Coding obvious stuff like, the stats that we put here on, how many times was this touched, how many times was that touched. That's easy to do because these price levels are in there. So you just have to see how many times out of 2,000 days this stat, this was hit. Boom, there you go. But with all the things to do with stop and entry, scale, and so basically what you have is you've got open type, context. Then you need to decide, okay, was that with the VWAP and the VPOC the VWAP and the mid above the VPOC, you know, that there it can become really, really complicated to do accurately. And obviously, accurately is what you've got to do now. You know, Vegas. And so I heard, the hell's his name? The guy who owns Citadel. They've got 1,500 programmers, not traders, programmers working to code their trading machines. 1,500 programmers. You know, that's taking it pretty serious. And, you know, they make billions of dollars. But I don't remember the statistic, but it's some phenomenal thing for Goldman. It's like Goldman Trading Desk hasn't had a losing day in years, something silly like that. Or maybe it's a quarter, I don't know, or month. I don't know. They've got to have had a losing day, but I guess, but maybe not. And Citadel, Knight, Goldman, these guys all have hundreds of programmers working on algorithms and for trading and trying to glean an edge out of the market. And we're just sitting here looking at, you know, a simple little map with liquidity and thinking we got it all figured out. That's why 95% of retail traders fail, is they don't do the work. They don't have any discipline. Nobody will ever get rid of monkey mind. You're never going to get rid of FOMO. You're never going to get rid of fear. You're never going to get rid of those emotions. But what you have to do is pull up your boots, you know, or cowboy up, or pick an expression, and not react to them. Focus on the rules that you have established for yourself or that you know to be true, and use those for the trading decisions, not the rest of it. You know. All right. So now I don't know what's going on here. There we go. All right. Get everything back in business. One thing that I have discovered the hard way, if I haven't clicked on the Bookmap window and brought focus there, the keyboard entries don't work. Obvious, I guess, but I didn't think about it a time or two, and I would see the market moving and be waiting for a specific setup to engage with the market, and then I'd key in the entry, and nothing had happened. So that was kind of stupid on my part. Just all the little nuances of doing this stuff. Again, the purpose of the stream and my constant narration, or best I can, is for my video trading journal. So I see what I was seeing, and through the narration, I hear what I was thinking. And it's quite helpful and amazing sometimes when you go back to replay. You hear what you were thinking at the time and see what you were seeing, and you think, what the hell was that thing? What are we going to do now? VWAP, mid? Are we going to run down and take that VPOC? I'm not going to bet on that. Looks to me like they're stepping up. There's the big make everybody hurt, and then boom, boom, boom. So what we've got now is higher highs, higher lows so far. Let's see if that continues. And, they're picking on spots where all the retail guys get real excited. All the retail people here, minute we crossed the VWAP and mid, all these guys got long and started slapping their stops down here, right? So they just took 107 stops out right here. Now they only took 2, so that's kind of an exhaustion to the downside. Exhaustion for up. There's no more stops down there, so they'll probably run up now. They harkens back to my thinking about value. I don't really think that much of this intraday auction has to do with value of the S&P. I think it has to do with speculation. Stop runs, all that stuff is just, the fuel, all those acronyms or euphemisms that we call them. It's all about speculation, I think. And right now we're just bebopping around on top of that VWAP and mid, and got all this unauctioned area up here, if you want to call it that. String of singles, if you're an old market profile person. And we've got the mid down here. So if you want to talk about a mean reversion, that's this. That's outside, or actually more perfectly outside in. That's the typical one, but it doesn't seem to be. Now, the minute I said that, it'll pan out straight down to the VWAP or VPOC. So we're down at 19 to 12. That would be a lovely, lovely short. And it's just looking like it's going to head right down there like a good little trader. I guess I'm just too damn risk adverse, I guess. And I sit and talk about them and call them out, and that just didn't look good to me. I think the place to have done to have engaged was up here into this liquidity, which is kind of weird because this is the extremely low or outside edge of this entire distribution. And that's where they're stacking the liquidity, which, what does that mean? That means that all of these people, when it got up here, figuring it was going to go short, have stacked their stops. Where do you suppose the market's going to go before the day's over? Into those stops. I mean, I would guess. So let's see here. Well, we're pretty much smack dab in the middle of the IB, high and low. Leaning a little bit to the low side. Obviously, the IB stat hasn't been taken, but it is, the IB has been set because it sets at 9:30. I wanted to try something here. I wanted to see what happens if I put a line at Ray. I want to go at, let it go. Oh, oops. Okay, over here. Here we go at 9:30. I'm trying to draw a line for the IB and low. See if that works. So there's the IB low, and there's the IB high. From 9:30. Yeah. Just out of curiosity to see if those lines work and if it means anything to me. But, at least now there's a line marking both of them on the chart. Whatever the hell that means. If it does any good or not, I don't know. See what this guy's up to out here if you need some help. I think I probably, oh shit, I forgot what I was doing. I think I probably said to some fellas here. We had a big foundation move here. and kitchen floor buckled up and stuff. So the guys had the foundation people in to jackhammer holes in the floor and dig down under the floor and jack up the piers, and it's a nightmare. And now the fella's here to fix the tile, so we'll see how that goes. This is goodness, there's a good supply of wine on stock. All right, so we'll move the stove now get out of its hole. This is what I meant. And the guy didn't put up plastic to cordon off the kitchen, so the whole goddamn house is, or at least that half of the house is about an inch deep in tile dust. My wife's going to go on a warpath. Well, we had a VPOC migration up. Now, they couldn't get the VWAP mid down to the VPOC, so the VPOC, they traded it till the VPOC migration came up from here to here. And let's see what they do with it now. And they might be content for the time with the market numbers. They didn't like it up here. They brought it down here and got it, spanked all these guys. And now they're just going to consolidate out right across here. So we'll see if that 52.20-ish, 18-ish area stays popular. So what are we going to do now? This is the price check at aisle 3, they call it. You see that why I flagged these? You don't see that it's off here, but if I scale way back, oh, look at there. Boom, right down. Price comes right down to check that previous. Is it still too low? How high will we go? And back down again. Boop, boop. And now they'll go up here and check this, and these guys will get all excited. Yeah. You could make a case for, right here, you could have made a case for mean reversion up to here, right? Up to here and then here. However, this is a Morning World Robinson because you had the VPOC migration south. I don't even know what I'm doing here today. I got so much crap going on. We just got through moving the stove, and it is interesting to watch and narrate. And unfortunately, I haven't taken a trade because as I mentioned earlier, I find it important for me to be focused. Now we have a little bit of I like to wind this up so I see these grid lines. It comes to about 2 ticks in here. And that way I get some sort of perspective. Look at this crap. They're making those poor retail guys dizzy. And look at it go. Up, up, and away. Now we're going to get into all this low volume area, and everybody's going to get real excited. We're still at an area where mid VPOC, and there is, well, this damn liquidity sneaking in here like that. I got to really think long and hard about what I consider to be an obstacle. Like I was saying, this seems like a lot of action, right? But here's what's happening. It's a big, long consolidation, and they're just whipping up a big batch of retail soup. See what happens here as they approach developing value area high. Why does that keep? Oh, because I keep pointing it out. There we go. There we go. Just to recap, I don't have any indicators. The closest thing I use to an indicator, I guess you could say, is VWAP, which is a calculated line, but it's pretty widely recognized, and it's built in here, and I don't use anything else. This is the VPOC for the current session, which is the RTH volume profile. There is one buried under here, which is the same for the full session. It's a more muted yellow. And there's the mid, which is the mid of the current RTH session. And this goofy looking blue thing is the correlated market of the NQ by action only, not by price. NQ's trading at, where'd it go? NQ's trading at about 18,309 at the moment. So yeah, that's what's on my chart. And that's what I have. The rest of it's volume profile. These lines, this is the heat map, which just indicates visually and graphically what's living in the book, the levels in the book. If you're good with a dome, which I'm not anymore, see what happens here. I have an inkling that we're going to get some lower ground, and let's hope I'm right. Oop. Could have shut that off. I forgot about that. I make copies of all these, or screen grabs of these different trades so that I can, they go in my journal. This might not be a very good idea here. I was thinking we were going to get some lower movement because the NQ was leading the way. We'll see what happens. Maybe not. My stops are above the VPOC, which is not the best location. What I'm looking for here is my risk neutral. There is, I don't really consider these to be liquidity problems or obstacles. I'm not liking the way price is just stalling out here, however. Now we've got a small micro composite building here around the previous RTH low. We'll hopefully get some traction lower than that, but maybe not. I don't know. That's kind of disappointing. Now, come on, boys. I was looking for, this is kind of a late entry on the, for the mean reversion story here down to this lower area. Got kind of upside down, I guess. And it's probably going to get spanked here for too long. What do we need to shift? 12. We just need a little bit of couple thousand contracts to trade right down here. And we'll have a VPOC migration, but I'm not going to get there. I don't think I'm going to get that lucky. I think I'm probably going to get a stop here, which is not making me feel all warm and fuzzy. Yep, there we go. So stopped out on that one. Bummer. That was an error. I think that was definitely a FOMO trade. And that's how I will journal it. So, yeah. And it's pretty, right now it's actually worse than it was when I got. That was a real bad entry. That's just real stupid all the way around. There's no question about that was FOMO. Bummer. Well, that's disappointing. I'm disappointed in myself. I mean, I've got the POC, the VWAP, and the mid above, and I'm going to go short down here. What the hell is wrong with me? That's really a brain fart there. I deserve that one. Especially after having just talked considerably about this consolidation and waiting to see what was suggesting that I should see the reaction at developing value area high, and then just took a stupid trade. Well, I have error codes in my journals. Error, FOMO, error, breakout. I consider breakout trade an error, and this is basically both of them. So this is a real dumb move. And what happens in trading is you definitely get taught a lesson for dumb moves. Now, something I need to start thinking about, I guess, is, well, here's the thought process. I was getting ready to say trade management. Should I have realized that this was a bad trade and exited right here, or as soon as I recognized it was a bad trade? Yes, I should have definitely done that. But suddenly your monkey mind kicks in and you start thinking, oh, well, let's see if it goes my way. It's just got to get it down here to the scale, blah, 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 blah. Not paying any attention in where the POC is, the VWAP, or the mid. So that was really stupid on all fronts. For me. And that will be definitely an error. I'm going to say FOMO, and then I have to really get more and be more focused in the market, as I've said 1,000 times this morning. At this point, I should have realized right then, holy shit, look at this. I'm below this, this, and this. What am I doing down here short? And get out of it, just simply because I like shorting. And I saw this breakout, and I saw this pop down, and I thought, oh boy. Now, I don't short up here. Shorting up here would have been okay. Mid, the VWAP. It wouldn't have been this, would it? No. There would not have been enough range because of the VWAP and the POC. But it would have at least been a scale and then a target. This down here was just stupidity. And for which you pay the price of a stop, price of admission, the joy of trading. One day you're up, the next day. And that's another reason why I have to start increasing my number of trades. This is the second trade I've taken this week, which by no stretch of the imagination is probably a good thing. And it certainly doesn't help the trade statistics or the win rate or any of that stuff. And it, just really decays the statistics for vetting the trades. This random stupidity thrown in there is just random stupidity. It's not good to talk negatively about yourself. I realize that, but then there is also a point where you have to recognize a mistake. So my mistake was to enter FOMO. My second big mistake was not to recognize that I had done that and immediately kill it. I could have actually killed it for a small profit, but I could have just killed it immediately. And that's not being aware and in the moment of trading. So that was not a good thing. After all this time, whatever it is, here 2 hours and 56 minutes on the stream and talking about a million different times what I was thinking here. Consolidation, and here we are, some more, right? Yep. So one stop in the bag. Now I have at least matured to the point that I don't have any issue taking stops. I don't move stops. I don't do any of that crap. So that's not an issue. My problem, I guess, is trade placement and entries. That's one of the bigger ones. And thou shalt not diddle in the middle. That's, I think, in the Bible someplace. This is the middle. So, here was a mid. There's no way there's scale to the VWAP, which is the first obstacle. Or if you were thinking mean reversion, that's not good either. Now here we go, setting up for another instance of my latest folly over here. So I don't think, well, it's Chop City, right? Rotational, and it's a tight range, so there's no place to trade. I paid the price of FOMO, and I won't do that again. I'm hopeful. I mean, today. It's a constant vigil. You have to maintain a constant vigil. And it's all a mind game. I mean, I was a pilot for years, right? So that's different. I mean, you are focused on things outside of you. And that's, for me, that's much easier to focus on. That's why discipline and, usually discipline, like not moving stops and stuff like that, is not a problem. But in this case, in the case of trading, it's all psychological, right? So you don't get FOMO flying an airplane. So that's a completely different monkey mind aspect to control. Fear, yeah. You want to keep cool and methodical in the face of an emergency or whatever else. Absolutely. That's how you stay alive. But that doesn't get you here. What happens here is financial death, and it's all psychological. So that's I guess that's probably the biggest part of trading. That's probably the biggest piece of trading, is to get a grip on yourself psychologically and stick to your damn rules, which I didn't do here, and I paid the price. Was full stop on 2 lots, $300. 312 to be exact, because of the way I used to move these stops together real, OCD. I don't anymore. I leave the ones at 13 and ones at 12. I guess I should have saved myself $12.50. And now we are here again, up just past the mid, the VWAP, and yeah, it might rotate down here, but that's trading from the middle out, so that's not a long-term positive thing to do. Damn it, that irritates me to death. Nothing worse. It's one thing to take. I mean, the outcome of every trade is 50-50. It's a random market, but really irritating to take a stop on stupidity or a lapse of discipline or whatever it's called. And here we are again, now this may rip down here to the bottom and everybody be all excited about, here we go. Approaching the first target or the scale, and then we might make the next target. That's very possible, but that's not a trade that I think is viable in my trade plan, because this is diddling in the middle, and then we've been consolidating now for how long around this POC. It's migrated up a couple of times. So if anything, you would be expecting that they were going to trade it higher, and now we've gotten to my first scale and would likely get down here to the target and the developing value area low. That's just the joy of trading. Had I had this lapse of discipline or lapse of awareness right here, I'd be thinking, pretty cool. And that's a danger. I think trades where you screw up or FOMO and win are much more dangerous than, like, I will remember this one because it spanked me for a full stop. When you start to, when they win, that's when they're dangerous, because it makes it easier for you to lower your guard and to, question, well, maybe that's really not such a bad idea. And then you start looking for, because the humans tend to pay a lot of attention to finding patterns and randomness. Back in the day when it was a good idea to see something in the shadows that was going to have you for lunch, that was probably a good idea. So you start thinking, okay, so this was a viable trade because it was testing the previous value area low from below. That's bullshit. That's not a good level of anything. It's already been taken out, and at best it was only 50%. So, I don't think that's a viable excuse or reason, but you can be if I'd have gotten in over here and it had now worked out my way and was looking down here for the target, that's where it becomes dangerous, because you start thinking that those kind of things are reasons to take trades. In my opinion, this is all my opinion. There's about a zillion disclaimers in the description of the stream, so read up on them. And here we go, down to the target. So I would have been, fat, dumb, and happy and thinking I was a regular trade star here. And I'm disappointed, of course. And when I review this stream, I will pay special attention to my logic before the trade, during the trade, and now after the trade, and see which one was the most contained the most rationalization. I think that the concept of vetting trades and then only taking those setups whenever they present themselves is the safest way to eliminate all of this psychological crap or minimize it. Because if you know that, I don't know, pick a setup, every VPOC migration in the direction of context has a positive edge in your trade plan. You've actually proved that. And then every time you have a VPOC migration in the direction of context, by, if you want to, quantify it by so many points or whatever else you want to do, whatever the parameters are, you collect enough data to verify that that's got a positive edge. And every time that happens, you take the trade. Boom. You don't even think about it. You just take it. You're not right. You're not wrong. It's a random environment. You'll get stopped out, sure. But by the law of larger numbers, you will become profitable in the long haul, because if you've properly vetted the trade, and that's what's so important about vetting the trade. I'm not sure. I guess that's the right word. It's the one that's used the most, I guess. But in other words, you've identified a statistical significance in a data with a positive probability, i.e. edge, expectancy, whatever you want to call it. And here we are, past T2, baby. So there was scale T2 just early and cost me a stop. You know, and this test, this retracement to mid and failure, basically here's 48 out, then 7 and 8, then 7. So it's kind of exhaustion, but there's not, that doesn't qualify for the scale. Which is, there must be my scale for risk neutral is 3 points or 12 ticks. There has to be at least 3 points before the first obstacle so that I get scaled. And that didn't happen here. I don't trade out of the middle, so this test back up here. Maybe that's a bad, just a holdover from the market profile days. I don't know, but that's what it is. It's in my plan and in my brain. So, and now we're right down here, bing bonging off developing value area low. Right here, which was essentially my target. And yeah, magic. The magic of trading. Or not. Yeah. Disappointing. And here's the epoch migration lower to a previous area, which you see how these work. Where is that? Clear back over here. And this is that stupid thing here where it came down, price check, up, doop, doop, price check, up, doop, 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 back down again. What's it going to do? Go back the other way? And that's the thing that will come into your mind when you see of epoch migration. Everybody says, Tom and whoever else, don't take them mechanically. Well, then how the hell do you take them? In context with price, this, that, everybody's got a different spin on it. And we're consolidating now at the epoch migration lower, at the developing value area low. If we continue lower, we could be looking at the IB low, which is right down here, which is a stat, right? But I'm not in the mood to take 2 stops here, not being very confident about market conditions, and especially under the circumstances that we've had this VPOC migration chopperama here. Boom, 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 boom. Now, is it going to go back up again? Are we just going to consolidate through here? I don't know. And if I don't know, I don't trade, and I shouldn't have traded that last time. So I'll be right back. See how the tile guy's doing. it's worth pointing out that I trade not very frequently, right? And so stops are very important to me, and I don't like taking them. I realize they're a part of trading, and it's the cost of doing business and all those kind of things, and I accept that. And as you noticed before, or if you watch the stream, you'll notice I don't ever move them. I take them. I don't ever move my stops, and I get stopped out. But it's still irritating, and I try to analyze it as best I can and then record it mentally so that I don't make those same mistakes again. That's that's how it goes. Okay, so now we have successfully, finally pulled down the full session VPOC to align with the all over the place RTH session. And, funny, is it now right down at my target? Yeah. And up, they're going to go to price check this, and who knows, these are go shooting back up here again. That's bouncing off the developing value area low, I guess. Right now, I'm just kind of got a bitter taste in my mouth, and I would think that any trade I would try to put on at this point would be a revenge type FOMO, whatever, irritated of the loss, especially considering that, 10 minutes later, literally 10 minutes later, it goes exactly the way I had anticipated down to developing value area low. Doesn't change the fact that I FOMO'd in and it was a stupid entry place and all that other stuff. It's just one more thing about the market that, rubbed salt in the wound, I guess you could say. But I'm actually glad that this happened in a sense, because it's real revealing, or a revelation to me, to not have recognized how stupid this location was based on these levels and price action. Had this happened, I would think I was a clever genius, right? Now, it is different because it traded through here, up, down, back up to the mid or VWAP, and then sold off. So that is a little bit more in line with price, but it doesn't fall into VPOC migration. The fact that the VWAP is just a whisker away from the VPOC, and mid is up above as well. These are all areas that have stops, fuel for market movement. Yeah, so in a talk about looking for the bright side or the glass half full, this is actually a better outcome because it's a learning lesson for sure. More so, let me see if I can do this. I'm not very good at moving. Yeah, here we go. More so, not that this was a really stupid FOMO entry place, but that I didn't recognize that. I'm sitting here thinking, oh, okay, just get down here and get the scale, right? I wasn't recognizing, and I should have hit the eject button any one of these places. The second I realized how stupid that entry was, or how misplaced that entry was, below the VPOC, below the VWAP, below the mid, on a VPOC migration up. I mean, Jesus, that's got, yeah. I'm actually really glad about that. And that's something that I'll really take on board and try to figure out a way to constantly remind myself of that, to reassess my entry in terms of position. Now, obviously, had I been doing this right, I wouldn't have taken that entry because I would have known that this was the improper position, right? This was terrible location based on all the things I just said. So which came first, the chicken or the egg, But for sure, even if the egg gets laid long after it was supposed to, I should have recognized that that was a bad thing in here and just hit the eject button rather than taking the stop. And again, I never moved the stop. So, that's not going to be the case. Like, oh, well, if I'd have just put the stops up here above the swing high, I would have been fine. Yeah, right. And if I were 6'5" in black, I'd be a basketball player too, but I'm not. So there you go. My rules say what I'm supposed to do. And here we have a classic price check at aisle 3. Here's aisle 3. There's the big aisle with the VWAP just above it. Came up here and tested it. Coming back. Now, if that's going to be a regression to this VPOC, who the heck knows? But that is a classic T-Lab price check at aisle 3. And the T-Lab again is a Bookmap Discord chat room called Traders Lab, started by a guy named Tom B, who's, in my opinion, from what my travelings around the internet, etc., he's about the only real deal out there that I've bumped into. First and foremost is he's got nothing to sell. He's only sharing his experience of 44 years of trading futures. You have to sign up to the Bookmap Discord thing, whatever that, app or whatever it is. The link to that is in the description here, actually. But after that, you don't have to be a Bookmap subscriber. Nobody's going to try to sell you that or do anything else. So it's just pretty much near like, and a pretty good group of people. There's some pretty clever folks in there that do some good trades. And I suppose it's because most of it resonates with me, with what I think. That's probably why I think it's a good place. But there's nobody trying to sell you anything. And there's, very strictly no political bullshit or, any of that kind of noise. So I recommend that site. It's the Bookmap Discord Traders Lab. A guy named Tom B. He streams once a day at about 10 from 10:30 to 12, both on YouTube and in the Discord room. So there you go. Damn, that is irritating. I don't mind taking a regular setup and getting stopped because I know that's, the market is random and that's what happens. But I don't like being stupid. Making a dumb mistake. That's, irritating. It's like landing a plane with gear up, it's like, no excuse for it. And now is a likely spot to think about a little FOMO because we've tested this VWAP twice. And sort of some exhaustion here. We got 52 stops out here, 34 out here. I'm guessing it's going to come back up here again, frankly, before it rotates down to the VPOC. And I may be completely wrong. It's also 10:42, so we're a little bit a ways away from lunch. 12 o'clock. 12 o'clock goofiness. Volume is kind of light. We're at 1.1 million. I got to I used to have a column for previous volume so I could just see or change. That's a good metric to have. Obviously, volume is a measure of liquidity. The more liquidity there is in a market, the more stable, it comes to levels and stops. The NQ is a very thin market and, it'll go blowing past levels like they're not even there. So that's a function of liquidity. And I used to trade the NQ exclusively. Here we go. VPOC migration back up a little bit. Okay, we get to put a new marker in here now. Yeah, these guys are all over the board, and I'm pissed. What can I say? One thing I'm extremely aware of is revenge or FOMO trading, revenge trading. So I will have to take a very, very definite setup in my trade plan view to re-engage because I have made that blunder in decision making earlier and took a stop on it. So I think I hear the doorbell or some big boom noise here. I'll be right back. Now let's see what the hell's going on now. This tile story is interesting day. I'm glad I took some time away here. Well, so now we have a VPOC migration up, and you see the reason for all of these flags. These are all the spots this VPOC has been this morning. This one, don't be confused, is the full session volume point of control, which is here. That started at 1700 last night. This is the full session volume profile, and this is the RTH volume profile, and this is the chart, which just charts what builds the profile on what data is here. So look at all the nonsense we've had with this BPOC, right? And the hell the open go? Well, here's the open. Boom. Up, up, down, up, down, up, up, down. You know, now back up again. It's just all over the board, which is indicative of a consolidation. I mean, look at this. Here's the open. There, everybody got spanked. Trade back up here, and now they're just consolidating. Statistically, or just, you know, eyeballing it, you would suggest, one would say we're below mid, we're below VPOC, probably likely to target the IB low for the IB stat, assuming that we do the IB stat, which, you know, doesn't happen every day, but one would imagine that that could be the more likely. In other words, would imagine it would have a higher probability, perhaps, than the IB high. But I'll point out to you that this was the case yesterday, and we took the IB high stat first. Then the big sell-off on the bond auction, 30-year bond auction, back up to the high. Overnight traded higher, and then boom. So, yeah. These are just some lines that I've manually thrown in at the IB high, and I missed that one. I didn't get that one correct, so oh well. Shit happens. I'm looking at building a piece of code that automatically draws those lines. As just a reminder, there is a add-on which you can buy for $149 that does that. And it uses the CSV file, the same as the Cloud Notes column. However, it will plot all of the things in the CSV file. So I would have to create another instance exported from an ES chart, which would only plot the IB high and low, if that's what I wanted to have plotted on the. I mean, I've already got the mid, the VWAP, and the BPOC. The only other areas that I would be particularly interested in are the IB high and low. And now all these years I've just looked at them over here and thought, well, that's okay. Having the line is kind of nice, I guess. And this is not very intuitive on Bookmap. Oh, shit. I don't know what happened there. I don't know. I don't know what that was. I was trying to edit the stupid thing, but that's what I was trying. You got to be real careful that you don't click inside of here. You're going to enter a trade. I was trying to middle click or whatever the hell it is you do. Right click over here. I don't even know. Here we go. Edit this drawing. Okay. I'm going to edit this drawing. How do I edit the damn thing? I don't know. You'd think you could just grab it and move it. That would make sense to me, but apparently it doesn't make sense to these guys. I don't know. Yeah, anyway, never mind. So that's pretty much IB, right? That's within a tick. Who cares? That was just something I was goofing with this morning. Earlier. All right, we'll get back to business here. Boom. I try to keep these rolled out to 2 ticks, give some sort of perspective. I'd like to get this perspective out of my way. Yeah. Timing is everything, huh? Oop, 10 minutes. You bet. Rockstar. So there we go. And we're coming up on 11 o'clock here before too darn long. I'm hearing all kinds of bells and whistles and things going off, and I'm not sure why. What's most important is nothing's happening on my trading setup, so that's all I need to worry about first, I guess. Yeah, so here we are. That 24 lot iceberg order's been living down here at developing value area low for a long time. Since 10:25. Well, not so long. 30 minutes from the last VPOC migration down. And irritating. I find my trading, I have in one of my local journal, which first of all, I have it set up so that IRT Rhythmic uploads the trades daily to a CSV file or an Excel file on one of my other machines. And then I have some code I put together that'll import that data into my journal, my local journal. And part of the statistics that I can look at there are days of the week I traded, how many trades, whether they were successful or not, and hours in the day, hours in those days. And in this case, I think that's also available on the, I've been a Jigsaw owner for years, almost, I don't know. I think I must have got it in 2015 or something like that. And because of that, I was able to get a deal on Journalytics, which is their online journal. And if you are fortunate enough with the Rhythmic setup, you can have it automatically pull those stats real time. I do it at the close of every day because the way I've got Rhythmic set up with Bookmap and IRT, there's only two settings or two instances there, so the Jigsaw would be the third. So I always close Bookmap off at close at 1600 and then open it back up at 1700 so that I have each day encapsulated and saved separately. And while Bookmap is down, I open Jigsaw and then it automatically imports the trades of the day from Rhythmic to that Journalytics journal. So those are the two that I use. I think it might have a time of day in there in Profit Seeker. It's a pretty complicated looking thing. It's not cheap. It's $500 a year, I think, with a lifetime subscription to Jigsaw. Oh, Peter Davies in Bangkok, my neighbor when I was over there. Lived in Kuala Lumpur for 11 years, just up the road, 2 hours. Kuala Lumpur's down the road 2 hours from Bangkok. Yeah, so what in the heck have we got going on here now? Well, here's a VPOC up. That's not something I'm interested in. Now, here we get up around the mid, which is kind of the outside edge, and there would be just not quite 3 points of range to the first obstacle, which would be the VWAP. And then the POC. There is a couple of structured trades in TLAB which are VWAP to POC or mid to POC. The issue here for me is that, well, not quite. Yeah, I guess it is just exactly 3 points to the POC, to the scale from the VWAP. But I'm kind of thinking that they're looking like they're going to trade up a little bit higher towards the top of this rotation they've been doing. And I'm not much of a candlestick person, but I think that a consolidation down like this is called a bull flag, I think. Anticipating that they're going to take it higher. I could be completely goofy with that. Lower highs, lower lows. I think that's called a bull flag. If I remember right, the flag goes opposite the direction that they're thinking the market's going to go. Beat the hell out of me. Anyway, so there's another complicating factor to confuse you. As if there aren't enough. Yeah, so here we go. The dummy here. Dummy. Running dummy. It's my Indian name. My American Indian name. Native American. I guess that's the correct name now. As it should be, Native American, yeah. I had the good fortune of growing up on a cattle ranch and horse ranch in Montana. And over towards the eastern side of Montana is the Crow Reservation and the Battle of the Little Bighorn and all that stuff. A lot of really good people and nice friends. And spent some time in Wyoming, which is around Casper and over around Riverton is the Shoshone Reservation. So I've been around Native Americans quite a bit in my life, in my younger life. Real pleasant experiences always. Sure that, there's crazy ones just like everywhere else, but like every place else, they're the ones that seem to get all the press and the, normal people, the normal nice people don't, I guess. Oh, yeah. Once again, this is not a viable trade. It's a viable structured trade, but not for me because there's no range. And that's the reason I'm off of it as much as I'd like to be on it. And right now I'm going to be checking on the tile guy and looking for water. I just noticing that I got to look at the stream and see if the colors are, sharp and contrasting, because I keep the blue light, the night settings on my monitors because I spend so much time in front of my screen all the time. About somewhere around 12 hours, 10, 12 hours every day. And I have several monitors, high-res ones here. So I'm trying to, save my eyes best I can. I'll have to look at that next time. Guess I'll have to play it. I'll review the stream on one of my other monitors on another machine here, and then see how that looks. Just happened to notice something over there looked a lot sharper. And here we go again. Oh, is it going to be a FOMO? Is it going to be a breakout? What happened here now? So it's traded through there and headed lower, and I didn't catch any of it, which is frustrating and irritating. Of course, we have as I mentioned, there's this is a structured trade, which would be mid or VWAP to VPOC, but there's not enough range to the obstacle. And this is diddling in the middle, and we all know how successful I was at that last time. And anything down here now is FOMO. Down to developing value area low, which is where we were. Where? Right there, the target again. So here is this trade working out here, and here is this trade working out here. Damn, Now, is this a place to target the IB low? That's the big question. NQ is falling out of bed with vengeance, it seems. I don't really want to take another stop here today and be all bummed out on a Thursday, and none of these are really any kind of a structural thing for me to take. I mean, the closest this is a test of the developing value area low with a target for the IB low. There's a big low volume node. This is a high volume node on the multi composite, micro composite, whatever. And big low volume node last night and again today in the full session. Well, this was formed during the RTH session. So, yeah. I don't think that's particularly, but this old boy that was waiting over here for his iceberg got bought. 2,200 contracts on the iceberg bought up here. I'm just dying to short this and take it down to the IB low and get flat. So let's just make an imaginary trade here at 52.10. Let's say that I FOMO again. Take a 52.10 short, developing value area low. Let's call it that. And watch what happens. Here we have the trade so far today. This bankorama from the overnight longs, and then consolidation. Here we are testing the developing value area low. Are we going to take out the IB stat on the low side at 52.03? Big question. Okay, now if I had taken that imaginary trade at the developing value area low, I'd be sweating bullets because it didn't break down. And that's that's not a trade to take. I mean, that's not a structured trade for me. I don't have any vetted thing that says when we test the developing value area low, we continue, other than that's kind of an old market profile thing. And if you trade all the way across value and you get out of it, then you go into price discovery and look lower or higher, whichever way, whichever direction it's going. Just to recap so far while we watch this, was just an absolute brain fart, FOMO, and that's how it's entered in the journal. And everything was wrong. Whoops. If I can do this right. Everything was wrong with that. And okay, this is a FOMO trade on the breakout, right? It's here's mid, here's VWAP, here's VPOC. What am I thinking? And we've had VPOC migration up. Okay. So that's a FOMO entry. So be it. Here's the big failure on my part, which is really concerning to me. I didn't recognize that and hit the plunger when it's so visibly obvious now. So that's going to be a real learning lesson, and I will review the stream here as I always do. And when we get to that, I'll be really watching closely to wonder what the hell I was thinking. And I'm pretty sure I was just, wishing, hoping, what do you call it? Hoping, wishing, praying, or whatever that saying is to get to scale. But really should have hit the plunger when I recognized how off step I was, or on the back foot I was with my setup and my entry. So there you go. There's that. Now, what are we going to do? Well, we could be looking for a mean reversion back to, i.e., the mean, which is the VPOC, and that would be a viable entry insofar as there is plenty of scale or plenty of range to the scale of 3 points. My problem is we're testing the developing value area low. The IB stat is on the table, and the IB low is just down there 8 points away. And NQ isn't really doing a hell of a lot. I didn't engage up here, which is a structured trade, mid or VWAP to VPOC, because neither one of these locations, there was a required 3-point range for my scale for risk neutral. So just all breaking my way here. The joy of trading. Stops are a cost of doing business. That's just, if anybody tells you they don't take stops, and just, my advice is just shut off whatever you're listening to and move on, because that's absolutely bogus. And these people that come on the internet with, oh, my win rate is this and that and something else. Yeah, your win rate might be 95% if you're taking one stock, you're taking 3 ticks. What is the risk return? That's the expectancy. That's the real measure, or the profit factor. Google any one of them and see how you calculate them, and there you go. That's what really matters. What's the risk to return? If you risk 3 points and you make 2 ticks, that's a 100% win. But the risk reward ratio sucks big time. You've got to look at a risk reward of at least 2 to 1. In my case, with the risk neutral scale, I have 2 lots with 12 tick stop or 3 points. The first risk neutral scale is at a positive 12 ticks, 3 points, which means the second lot is riding free. The worst that can possibly happen at that point is a scratch, unless you're a complete moron and you move the stop away. Okay, so that means it's a 2-to-1. Actually not, because the first one is 1-to-1. The first scale is a 1-to-1 ratio, and the second one is 2-to-1. So I guess that means it's a 1.5-to-1. And I probably need to rethink a little bit that second target, but that's the only way you get anywhere. These guys that talk about high win rate and nothing else are just, they fall in the same camp as internet gurus and, those kind of guys. To me, would love to go short here. That's for sure. First of all, it's worth commenting that my tendency is to be a short seller. I've learned long ago, or at least I believe I observed long ago. My perception is that the market takes the stairs up and jumps out the window down. I've just always kind of found more movement and more success shorting the market. So my first tendency that I need to be aware of is, am I just looking for my tendency to short? And I try to be real cognizant of never trading against context. If the context is down, then I won't be looking for longs. If the context is up, I won't be looking for shorts. Next thing I want to look for is a structured trade, which has a identified edge, and then wait for that to manifest itself and then take it with a risk neutral setup. And that's how I believe the trading business can be a success. You take all the vetted or identified trades with an identified positive edge that present, and let the law of large numbers manifest itself to your account. The classic example of this is the gaming business from the casino's point of view. They determined years, and who knows how long ago, that there's a positive edge in 21, and they know what that percentage is. I have no idea. The key is they deal every hand exactly the same way. There's exactly the same rules. There's exactly the same payout structure, period. And the object of that, then their only object is to take or deal as many hands as they can. And the law of large numbers brings that positive edge to the side of the casino's account. And guess who's, doesn't take a genius to see who's making the money in Las Vegas or somewhere. And it's not the gamblers, just FYI. It's the house. And in so doing, a trading business that is statistical and probabilities is not gambling in any sense of the word. And you have identified structured trades. You anticipate when they're going to set up. You have these statistics that we put in here every day and these levels, and you kind of can then have targets to shoot for above and beyond your. In my case, it's the risk neutral scale, and then the T2 can be, altered to a target. That kind of makes vetting the trade harder, but yeah, that's the way it works. And I believe that's it. I believe that's the way to make money. I think that's the way to separate from the 95, 8, whatever the hell the percentage is of retail traders that go bust. That's the way to separate myself from that group. And believe me, I was on the other side of that coin when I first started trading early on. I also will never trade equities again, as it's a rigged market. Those, anytime that there's a specialist, quote unquote, who can see the entire book and where the orders are stacking and is in control of the order flow, that is not a fair marketplace. sure there's no tiling around here. The tile in the living room, so I can't put it out. I don't think the owners, I think she'll shoot herself if we put this tile down in the living room. All right, I'll go look again. There's dangerous people there. And so I'm like, I'm going to try a real long shot. All right, then what happened now? Boom. Developing value area low held, and up we go again. So there you go. And this is a real zoo over here today. I got a bunch of people putting in new kitchen tile floor and repairing living room tile floors and yeah. So anyway, we are now approaching the witching hour of noon, which is always magic. Usually everybody goes to lunch. There's a real trader, I think, and then the B team comes on and trades the hell out of things. Hello? Yeah, sorry. Your phone. I tried to send you a message of the tickets, but the tiles are long and 12 and quarter inch square. Colors close, I think it's fine, but they've got to be the same size. It's going to be a real. I'm sure Stella won't like it. Yeah, just you want exactly. I think it's 12 and 3/4 square. I didn't understand. Yeah, yeah, that's right. 7/8 square. Yeah. All right, or 12 and 3/4. Okay. you can't go out. Not how it works. Wash his feet and shoes. Shower, need some help. But I need to shave and all those things. Oh, now I know what happened, Kitty. Yeah, so this is pretty exciting morning here. Well, what do we got going on now? Besides tile guys and holes in the floor and crazy, incredible. Yeah, so we're doing that same thing. All of these they're setup trades, but there's not enough range, if that's understandable. In other words, if the VWAP was up here and the mid was up here, or the mid is right where it was, if there was enough range between the VWAP and the VPOC, or the first obstacle here, if there were 3 points at least of range, then this would be a viable short VWAP to VPOC. And you target down here at IB low, which is probably going to get at before it's over. The problem is there wasn't enough range. Also, I don't now hear someone will say, well, here's a test up to the VPOC and then short down to the IB low. That's looks right. And that's RMT, rear view mirror trading, right? real easy to see and clear. First, I don't take POC out. That's diddling in the middle, and I don't do that. So, yeah, it's the joy of trading. You sit and watch a lot of stuff go by, and, I made a mistake this morning and got FOMO'd in and paid the price. So there it is. Paid the price of admission for a mistake. Where are we now? We're testing developing value area low, which we have done about 16 times. It never did sell off. We did that all across here. Boop, up she went, back down again. And it'll go up again, or will it come back down? Or will we finally break down and get the IB low? Who knows? Yeah, who knows? That's the joy of trading. You don't predict, you anticipate. If this, then that. If not, then what? So if we get above this micro composite high volume node up here, if not, then what? Likely trade down to the IB low, I think. Do I think it enough to put a short on? No, I just walked in after running around the house and measuring tile and moving refrigerators and stoves, and I'm not going to just jump in again and get salt pounded in my backside. And one of these moments, it's reasonable to expect the damn thing's going to go down and take the IB low. Statistic of taking one or the other is 90+% in any of the open configurations. And as this is lower in range, my guess is the lower, or the IB low, is probably the more statistically significant. Let's just have a look. Lower in range. So the possibility of taking the IB high or low is 98.1% in this open configuration. That's pretty damn good, right? 70% of taking the IB high, 70.4, And 50.9% have taken the IB low. That's interesting, isn't it? I didn't realize that. So I was completely wrong with my assumption that it would be more likely to take the lower one. It's 30% more likely to take the higher one. Here's the statistic. Here's the lower in range. Here's the IB high or low statistic. 577 times out of 1,926 days, the IB high or low was taken out in the regular trading session, and it's 98.1% of the time. Doesn't really. Oh, yes. This is the total amount of days. And where it opened lower in range is 588 days of this 1,926. Of those, 577 IB high or low was taken out. Okay. IB high, the percentage or the probability that it's the IB high is 70.4%. The probability that it's the IB low is 60.9%. So there you go. I stand corrected. Back to the trading screens. Back to this guy over here. And then, it'll go down and take out the IB low, of course. Of course, because I just got through saying that. That's it. Dogs, pets, and animals and kids, I guess I always make a fool out of you. And that's a surprising statistic for me, actually. Common sense to me would say that we open lower in range, so lower value is being accepted, and the IB low is, lower. That's pretty strange. Now, looking at today's trade, do you imagine that it's a higher probability that we're going to take this one out, this green lines are the IB high and low, which looks like a higher probability, taking out the green one below here, 5 points down, or coming back up here for 32 points to get the IB high. That's why those statistics can be sort of misleading, I believe. I still think it's a higher probability that we'll take out the IB low. But hey, oh my. That's as good a guess as anybody else can have. And my logic for that is just explained, but doesn't mean jack. How many times have we tested this developing value area low and then gone zooming back up in here to the VPOC, which by definition is essentially mean reversion trade, and it's viable because there is 3 points to the scale. So, and then the target's way up here at 17, right? So that is a mean reversion possibility. The only thing that gives me a bit of pause here is that it's the 12 o'clock hour, which oftentimes can have some strange behavior, in my opinion. This line, in case you happen to look at this stream sometimes, this line is just something a horizontal ray I drew on here for the hell of it to mark the IB low, and there's one upstairs for the IB high. I don't know if that's important or not. I see the IB low, and I've kind of gotten pretty used to watching these flags and these levels. I'm not sure that I need to have a line across here someplace.
POC, of course, is real handy and pretty necessary in my opinion because it moves. And you want to I want to track where that movement is. Same way with the mid and the VWAP. Yeah, I'd be high or low and stay here until the close, from 9:30 until the close. So, and here we're going to go down, and here we're going to probably go down and take out the IB low without me. Now, had I been on my toes more, I was talking about mean reversion. And right now it's 5 points, right? 4 points across here. Yeah, 3. That would have been scaled. I still wonder about the mean reversion. But that's a hard one. That's some people call that asymmetrical trade location, meaning that if you take it at the outside edge here, targeting the middle, you can put your stop 1 or 2 ticks below your entry, and if it goes against you, if you're wrong, you're wrong, right? If you're right, it's a beautiful thing. They call that asymmetrical trades. You risk 1 or 2 ticks to get 5 points. In my case, I risk 3 points to get 9, essentially, with my risk neutral scale. So I don't change those around because that would skew the data set for the metrics. If I change the scales, then those trades have to go in a separate category for analysis of vetting an edge. Because if you have a scale, one stop at 2 ticks and one stop at 12 ticks and one stop at 6 ticks, none of those can be the same, because how can you compare them? They're not apples and apples, right? You can't say, well, this had X% of the time it stopped out, because the stops are different all over the board. That's something that a lot of people miss when they're vetting trades. The parameters have to remain constant. If you notice in the homework statistics there for these levels, the only variable is the open position relative to the close. That's it. And that's how it needs to be. Struggling around that developing value area low. Struggling to get any traction above it or above this microstructure right here. Don't forget, this is the chart. So if I go out, this goes down to nothing, right? It's meaningless. What matters is this is the regular trading session volume profile, and this is the full session, okay? So here we have a low volume node. This is a high volume node from the micro composite. And we're basically just below it. That's right here. These green lines are it happens to be blue on top of green because that's the developing value area high of the micro composite. These green lines they're the high volume nodes, which push across to these and here. All just my, subject to me and things that I figured out. There's no law about that, but that's how I do it. And interestingly, on the chart volume profile anyway, that's a higher volume area, not so much over here. And here's a high volume node from the micro composite just below the developing value area low. And this developing value area low is in today's trade over here. That's this developing value area low right here. It's got nothing to do with the micro composite, so that's not to be confused. What day is this? Thursday, I guess. Yeah. 12:16, so we're just into the lunch hour. There we go. What's happening? Ooh, NQ falling out of bed. Taking Mr. ES with him. Remember that this correlated market is the NQ. Big drop. Is there another bond auction or some nonsense going on here? No. I have no news until 15:30, which is a Fed balance sheet. So, and there's our IB low. Stat is hit. And that could have been a lovely 7-8 points from here or up here, or any of these places that I just don't fit my criteria. And certainly not in the mood to take a, oh boy, breakout momentum trade. And I already did. I try to limit my stupidity once a day. And I'll have to go back now and see when I put the chapters in and all that stuff. The trade. $10.08. 10:07:30 about. Well, that's a couple 3 hours into the trade. No, new RTH low. How low will it go? And always the RMT is so clear. Well, yeah. Tested up here, tested this level. I got short right here at this iceberg, blah, blah, blah. And down we went. Yeah, that's how they do it. That's how the gurus and the smoke and mirrors guys on most of these websites do that. Do it. That's so easy to go back and narrate after the fact. Anybody, my 16-year-old daughter's a pro at that. But doing it real time on the hard right edge, that's a whole other story. That's another story. Guess that's the difference. Make this wrinkle a little bigger. So here we have our IB takeout. Now here's an IB test. Will we have the IB continuation or the IB failure? That is a viable structured trade from the T-Lab and couple other places. And this was, you could consider this to be a test of the IB, retest, and then looking for a continuation. But if you want to be real specific about it, where's the target? The low of the day? That's kind of a, that's not such a great target to have. And there's just 3 points to it. Actually, 2 points, 1 point, This is 2, that's 3. So there's only 1 point in there. That's not much range for an IB continuation trade. And I don't know where they might want to go here. It's a long way down to the micro composite VPOC, which is 5165 quarter. So here's today's trade. Here we are. This little red guy right over here. Right there. This is the micro composite VPOC. There's one from last time. There's the bottom. There's the top. Oh, where would we be targeting? Perhaps this area here. That's a pretty subjective deal there. And another test of the IB low. How low can you go? I don't feel all comfortable about an IB continuation, frankly, and I'll tell you a couple of reasons why I feel that way. We had a pretty balanced lower composite or lower distribution, and we've just traded out for excess. We have this small distribution on the top that has really no excess. We have taken the IB stat, so that's off the table. If they, want to go neutral like they did yesterday and several days recently, they'll need to get up and take this IB high. And that's not saying it can't just go falling out of bed. If you look at the market profile, it's even a little easier to see how the excess was drawn down here. So that's a pretty even distribution in the lower distribution. Now we have an IB failure, which would be that IB 30 up to developing value area high, POC, lots of stuff up above there. That's looking like where they're going. I'm a little always hesitant. And I guess what I didn't notice might be, I was going to say this volume point of control. They didn't really test up there for the IB low. I was just looking back for some sort of logics reasoning here. It was a long damn time ago. These things were up there. Here's a level, tested up to it, sold off. Yeah, there's a RMT, baby. Rear view mirror trading. So clear and concise and crisp and lucrative. I've even heard of some of these YouTube guys that take advantage of the delay in the YouTube stream to front run their members. They'll say, I'm going long ES at 03. Taking it, which they've already done, and now they're up here someplace. And they, 15 seconds later or whatever, and they're already selling it into their own members, buying it. That's kind of the ultimate in mercenary, I guess. I, haven't thought about that enough to make sure that it makes sense. It does when you say it fast, but I think the delay of when I see the stream delay, you can set. Oh, I guess you can set it the delay to whatever you want. So maybe they set the delay out further, like 20 seconds or something like a 30. I know one guy that I used to listen to now and then was always talking about don't do what I do because there's a delay and you could get whatever screwed. But he never used a stop, and he would double down and do all kinds of weird things. I don't think he was ever probably clever enough or mercenary enough to be front running to people that were in his room. I don't think. He's still around too, so a guy named Matt, trades by Matt. Seems like a nice enough guy. It was Austin, Texas. More power to him. More power to anybody that's making a living trading. The people that I don't have any use for, these assholes that are busy, they can't trade their way out of a sack, but they're making all their money on YouTube ads and acting like they're pros and giving out false information to people who are really trying to learn how to trade. That's one of the things that I find so admirable and why I don't hesitate recommending the Traders Lab with Tom B. is that's absolutely not what he's up to at all. He's just gives of himself and his theories and whatever else. He's not selling anything. There's several other people in that Bookmap. Don't get me wrong, in the Bookmap chat rooms that I wouldn't pay any attention to. Every second word out of their mouth is you can get this indicator on my website, or you can do this, or you can do that, which I find just they're just the same as all the rest of them. But in Tom's case, he's absolutely not selling anything, and unless he owns part of Bookmap. I don't know, but he trades, and I think he trades big size, and he's been trading for 40-something years, and I think he's probably got millions, I would suppose. I don't know. I would suppose he makes some pretty phenomenal days. He never shares that, and that's probably why. It would be great to see him actually live trade. I mean, then there would be no apprehension at all that it was RMT. But regardless of that, I think he's the real deal as far as what he believes, and his philosophies align with mine, and so I don't hesitate to recommend that particular chat room, and that's the only one I recommend. Then even the new traders, TopStep Trader TV thing is some of the presenters there. I mean, Hogue, I think, knows what he's talking about. And Michael probably does, but he's so busy doing other stuff. But some of the ones that they have on there I've heard them before on their chat rooms and stuff, and it's just BS and bus tickets. They don't have a plan. It's more like gambling, more so than I'm sure that if you ask any one of them, do you have a vetted setup for this trade? And what's your edge? They would not be able to tell you in a heartbeat. That would not even be a possibility for them to answer that question, honestly. And I think that's the all-important part of this. So are we going to continue on, or are we going to failure didn't work, the continuation didn't work, and I guess maybe we're just going to do the 12 o'clock slop around the IB low? Or the second I say that, it sells off for 50 points. Who the hell knows? Right now would be a breakout FOMO trade, so, bummer. Bummer for me. And any one of those spots would have evened me up. Which is disappointing. But I find that my first responsibility is to preserve the capital, which I didn't do a very good job of this morning, which heightens my awareness. And, if you can't, your main goal is to be able to trade tomorrow. If you can't do that, what the hell is, you might as well just go to Las Vegas. It looks like they're going to get ready to go lower here, and that would be lovely. But I don't notice these things until, they don't seem to present themselves to me until it's the move's underway, and I have a real problem with breakout trading. I, as a matter of fact, I have an error code for breakout. It's ER-BO, because I think that that's just a manifestation of FOMO for me. And I realize that it is a viable trade strategy. I mean, that's Richard Dennis and the Turtles. That was their whole thing. They were breakout traders. So, I don't know how many $1 million they made, but there you go. So it does work for some people. But for me, it's like a FOMO thing. So I try to stay away from that. And that's what happened earlier this morning, actually. It was more of a breakout FOMO reaction, late reaction to breakout FOMO. So every day you just got to be vigilant. Wrong screen, sorry. Every day you've got to be vigilant about the emotions will never go away. You're never going to get over, or, it's like saying, I'm never going to, get hungry again. Of course you are. And you will have FOMO, and you will have fear, and you have, taking a stop, and you will have all those things because they're part of our wiring. But you have to learn to recognize them and not act on them. I'm pretty good at that most of the time, but like today is a perfect example that I wasn't. Too many things going on in the side, and I'm starting to become a lot more cognizant of being aware of my state of focus on the market. And again, this is what I say here is what I think for me. This is not my advice to anybody else, or there's no right way. Or I remember very clearly, I didn't record it or something, but I wish I did. TopStep used to have a thing where they would interview some successful trader, right? Who was trading live, who passed the combine and done all that. And one of these interviews that I heard was a guy who, and I forget how much money he'd made, but it was a successful amount of money. And they were, Mick or whatever his name is, was interviewing him as being a successful funded trader. This guy was trading off his cell phone while he was running a skip loader, which is a bobcat, on construction sites in Georgia. And that's how he trades. And he was, just talking about that and how he was, would get in and watch this and that and stuff. And I'm standing here in front of 1, 2, 3, 4, 6 monitors. Two of, my 2 primary monitors are 32-inch 4Ks and all this kind of software in a quiet room and all this kind of stuff. And if I get distracted with something else going on, it throws me off on my focus. And this guy, maybe I take it too seriously, maybe I don't know what, but there's a perfect example of we're all different. And what I say and what I suggest is, for me, I do think that the basic tenets of what I talk about are true. And that's been reinforced for me by Tom and other real successful people that I know who have traded. You've got to have discipline. You can't not FOMO. I think I'm getting a knock on the door here. Stand by. I think I'm going to have to just eat the loss, and I don't know how long this thing's been muted, but so the tile guy's got the kitchen stuff in, and we've got to go out for food because the tile's all got to wait for the thin set to go off, so that's no fun. IB continuation got down 5 points, not so much. Back up for the, is this going to be a failure? Another failure? I don't know. Don't think. I don't think. And now if we take a look at today now, what has happened? Well, there was our big sell-off. There was a consolidation, sold off again. Back to the IB. Now what are we going to do? Drop again? Basically, the context for today is essentially down or south. We got, even in this consolidation, we had lower highs and lower lows. And now we're down here. So I don't think that a long would be appropriate in my trade world. And as much as I hate to say, I will probably have to shut the stream off and venture out. I can, when my wife gets hungry, it's not a pretty picture. Little Vietnamese gal, but they're like little tigers. And I have two of them, a mom and a daughter. So could lose an arm pretty easy. Situation if they're hungry enough. Yeah, this IB failure is gotten up to a scale there. Not yet here. If you took the double test, this is well, it's not really. I was going to say this is an instance of exhaustion where we had about 12 stops out here. And then one stop here. So there was no more fuel down there. Four, there's nothing down there. So what are they going to do? They're going to go looking north. Likely. Likely. Let me see what's going on in the, damn it. Got to get this right. Here's what I was talking about with the IB continuation. I'm obviously scattered here mentally. Sorry about that. Here's 12 ticks. Here's 12 stops out, right? 12 stops for 3. Come back down for 1. That's exhaustion or divergence, whatever you want to call it. Exhaustion, because you don't have, here's 12 ticks at 12 stops, 1 stop, nothing left. They bounce back up here, another 1, a 4, now 29. Now they're going to head north because there's no fuel down here to get. That's the idea. And at the moment, now we're back up past the scale again. But it's the 12 o'clock hour, and we're nearing the value area low, which we had quite a bit of consolidation around earlier today, and this little pop here might be construed as another one of those. Be right back. looks to me like the IB failure was a excellent setup. Timing is everything, you know. Go get the vacuum cleaner. Jesus Christ. I give up. Yeah. Probably hear the vacuum roaring in the background. Actually, this has been a big mess around here. I'm just sorry I took the trade this morning. But I thought I'd get in and out before all hell broke loose. And unfortunately, I did not. Now we'll go back to the Be Right Back and see what kind of trouble I can get into next. My, look at this go. What a perfect IB low failure, or IBF trade. Here. If you want to have another test here. Essentially, for many of these entries, you have no heat. And up to the another way to put this, besides the IB low failure, is mean reversion, right? Outside edge in. And that's also what has just happened. So, yeah, I'm so glad that I was wiping dust off the vacuum cleaner instead of making, a handful of money. But, hey, the beautiful part about trading, one of the nice parts about trading, I think, is that it's a constant stream of opportunities. It's like there'll be another bus come along today or tomorrow, And no reason to get upset about that. There's certainly no reason to get all excited about, oh boy, I got to trade now. That was my problem. This morning, feeling the heat, the pressure that I wanted to get. I knew all hell was going to break loose. I wanted to get something in the bag before. And as a result, I'm sitting on a loss, which is one stop, no big deal. I mean, certainly not the end of the world, but piss you off enough to irritate you, that's for sure. So we have officially made the mean reversion trade. There's no real target that I'm aware of for the IB failure, other than probably it is by definition a mean reversion or a rotational day type of trade. For example, you're not going to have an IB failure in a trend day. You know, think about that for a second. So, oh God. Yeah. Disappointing. But that's life. That's the magic of trading. Let's see here. I haven't had any migrating VPOCs. One of the handy features, what's that all about? One of the handy features of IRT, this yellow line is the migrating VPOC. The red fixed line is the point of control currently. VWAP, mid, full session VWAP. I mean, VWAP, mid, and full session VWAP. Now I have it set up, IB low, IB high. And now we're going to see what the boss is up to here. Hope I don't lose a hand. All right. So the plan now, I have just been informed, as we can't use our kitchen or anything, is we're going to go out for lunch, which is understandable. I will leave the stream on so that, well, it's 1 o'clock now. In the odd chance that we return and there's something that looks presentable for me, I'll trade it. I've learned that I've made a commitment not to take any trades off stream. And a couple of times I've not taken a trade because I couldn't get the stream up and going fast enough. All right. So I'm going to leave it run and then, may not do anything again, but at least it's there for the benefit of anybody watching. There's the IRT. There's the IRT, and there's the regular Bookmap. Get this scrolled out where it's kind of easy to see. Yeah, well, that doesn't work too good because there we are. Now we got the IB low, IB highs up above. All right, so I assume be back. was kind of a bummer, but yeah, took longer than I expected. Here we are, going into 3 o'clock. I don't see the usual rush of algos around price. Some nice price moves. Sorry I was not around to participate, especially after the stop this morning. But it is what it is. And so we've gone neutral. What the hell? No, an IB low. Holy smoke. No, not even close. I see what we did now. I was looking left-handed here. So we've traded up, traded back down, and back up through the IB low. Pretty much the same story as NQ. All right, well, I'm certainly not going to walk in cold and throw a trade on, so that didn't work out very well. It never, very, very seldom does. This could be the closing swing trade. That big push to the top that everybody's so excited about always. I'll let the stream go now till 7 hours and 32 minutes. Crazy. Crazy. After all these years. Look at it go. So this is probably a closing swing trade. But I'm certainly not going to get in there. Coming up to the VWAP mid and full session POC. That's some quite nice movement today. Unfortunately, my personal world here was all upside down at the house, but yeah. Oh, yeah. So I'll let it run up to 3 o'clock and knock it in the head, and then review for the timestamps, etc. disappointing trade day, but we got some stuff accomplished at the house here. The tiles done, the kitchen and whatnot. So, what are you going to do? Yeah. Sucks, but that's it. It's certainly don't live or die on one trade. I've gone over that enough, I believe. I'm going to now kill this at 3 o'clock. Pretty close to it anyway. I'll make it 59. I guess I'll make it 3 o'clock on the trade clock down there. That's down here. Got another minute to go. Not that there's anything spectacular about this stream, but it's so just about. No, thanks. I'm so full from the lunch I had. Thanks very much. Yeah, and there's going to be a run up to the into the close, I guess. Would have been a nice long to take. I just don't have any confidence doing that on those kind of, it's not a vetted trade, and I have no clue. So there you go. Well, I will.